Understanding Investments a Few Minutes at a Time by Daniel Dower, from Chapter 13, Money and Currencies, issue number 50. We generally think of currency as coinage or banknotes, but it can be any medium of exchange, including credit, beads, gold, or cows. Since the value of everything is relative, so is our money. If we have more or less coins, beads, or credit, we affect the supply of money and its relative value. Inflation. In everyday speech, when we discuss investment returns, the value of a house, or the price of a gallon of milk, we speak in nominal prices. Real prices are independent of change in the value of money, whichever currency. Since currency values are constantly changing, it would be very difficult to keep things straight using real prices. For more reasons than I care to get into here, modern monetary policy has come to rely on a low, steady rate of inflation, usually 1 to 2% annually. Still, in times of economic stress, positive and negative, prices may change rapidly. Even if we don't go to the extremes, such as experienced recently in Zimbabwe or in the German Weimar Republic, inflation, rising prices, deflation, falling prices, and disinflation, prices still rising but not as quickly as before, can have serious consequences on an economy. The subject is extremely complex and still not completely understood. Theories vary about exactly what causes prices to change. The average investor doesn't need to spend too much time on this. When I feel it's important, I'll refer to inflation. In our global world, many of the things we buy come from other countries. Companies often do business in many currencies. Most use derivative hedges or borrow money in local currencies to help reduce the impact of changing exchange rates. I'll leave such detailed financial management to them, but currency exchange may impact our investment strategy. It's something to study up on and keep in the back of your mind. Some investors prefer to keep a portion of their assets in inflation hedges, such as real estate or commodities. I'm not a fan of these allocations for ordinary investors. I prefer to keep my focus on income-producing companies in whatever currency or inflation rate environment they may produce. Despite hyperbolic fears, even without currency, civilizations barter, trade one good for another. I want companies that produce goods to earn money in whatever form it takes.